Hi, welcome to Forex in 4. I'm Mike Conlon for FX EDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, April 15th, 2010. This is tax day in the U.S. For some folks, not a happy day. I myself, never really like going into tax days. It reminds you of, just how much the government likes to stick their hand in your pocket. But in any event, that's not why the markets are lower this morning. We're seeing some risk aversion across the market, and it's the usual suspects today. We're hearing the Greek situations popping back up. We've got the elections in Great Britain. There's some news out of China. But every once in a while I like to wax poetic, and it's kind of funny because a lot of these situations seem to play out time and time again, and it's kind of like you're watching a bad rerun of a television program because you keep seeing it again and again, and that seems to be what's happening with this Greek deal. Let's just take a quick look at the Euro USD here. We're looking at the daily chart. As you can see, pretty much the euro's been trading in a band here between 138 and hasn't quite gotten down to 132. It looks like the low is about 132.75, but basically, here's what happens, all right? We know Greece has a problem, and they need to raise money to pay off their debt. So, everybody gets together and say, okay, here's the solution, no problem. We're going to back Greece up, and then they issue their bonds. That's great. As soon as the bonds get issued, right after that, the euro starts to strengthen. Then Germany comes out and says, oh, wait a second, no, this isn't right, we shouldn't do this, and they may need more help, whatever the case may be, and then all of a sudden the euro starts to sell off. Why does Germany do that? Well, they're the second largest exporting nation out there, or second or third, I think, behind China and the U.S. But their exports get hurt with a higher euro. So what they do is they're basically jawboning the euro lower. Now, this is sort of a dangerous game they're playing here because, every time they do that, the market becomes more and more skeptical over Greece's ability to raise cash through the bond markets. It costs them more money, which in turn down the road could cost Greece more money. But, this thing seems to happen. What will happen is that this will be a problem going into the next time Greece needs to issue bonds, and then all of a sudden the new solution will be reached, the market will be reassured, everybody will pile in, the euro will strengthen again, and it's sort of like rinse and repeat, I laugh when I think of this, Chevy Chase movie, European Vacation, where he's going around in a circle going Big Ben Parliament because he can't get off the track. They're just going round and round, and we're actually seeing that happen with the pound a little bit here. Let's take a quick peek at the pound. Pound seems to be holding up nicely, just back a little bit, but we've got another poll that's coming out today. Now they're showing that the conservatives are back in the lead. So we've been seeing a lot of conflicting polls that come out of Great Britain regarding this hung parliament. So it's sort of like, okay, conservatives are in the lead, they're going to have a majority, so it won't be hung parliament, and then the pound starts to rise, and then all of a sudden, whoops, pound's getting too high, so now we have another poll that comes out that says no, the Labour Party's narrowing the gap, but could be hung parliament, so then the pound sells off, and it's sort of like this little game that everyone seems to be playing, and it's really I myself am getting a little bit tired of it, but we're going to see what's happening. See other news, Aussie's down, risk aversion. They came out and said consumers expect inflation to be up around 4.1%, which is bad for Australia consumers. But you got to remember that the RBA has been pretty vigilant about raising rates, so I don't think they're going to let that happen. If anything, it's going to be a positive for the Aussie, as the RBA will raise rates to combat it, which will then encourage cash to flow in through carry trades. The other thing I want to look at real quick is the loonie here. We're looking at the dollar loonie. As you can see, it's right around just under parity here. Hasn't quite broken back above, but a note out of Goldman Sachs, they're raising their outlook on the Canadian dollar, and this always gives me a reason to pause, because I got to tell you, over my years of experience, whenever Goldman says something, you just want to do the opposite. Don't ask why, just do the opposite. They're not in business to be telling the public where they should stick their money, and usually they're doing the opposite through all their trading desks and their internal hedge fund and every other thing. So it kind of scares me a little bit because I'm also positive on the loonie. Although, they didn't really step out on a limb here. They said it's going to trade down to around 98, which, hey, that's not too far away. So perhaps that means doing the opposite. It's going to trade a lot further. So we're going to see what's happening. Here in the U.S., the initial jobless claims were higher than expected. I don't know who was expecting these things to turn around overnight, but, that's what's happening here. So we're not out of the woods yet here in the U.S. economy. This is encouraging risk aversion today, and that's what we're seeing in the market. So that's what we've got for today. Trade well. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.